Hello and welcome to another episode of Casual Friday. I'm here without the duck. He's currently in the hospital with his fiancée and newborn, so I'm sure you'll join me in leaving your good wishes and congratulations in the comments. So this is going to be a shorter episode. Hopefully he'll be back next week and we can pester him about all sorts of paternal questions. For the time being, let's talk about the market. As always, we're brought to you by Woo. Check them out in the description below. There's a long form article there and also a link if you want to sign up to support the show. They've got a competition going on for existing affiliates. If you're already signed up, you're automatically entered, and there's a $5,000 prize pool. If you don't get liquidated, you might win some of it or you might not. Depends how it goes. So let's talk about the market briefly. There's been some action this afternoon, as you can see on the low time frame chart, which we'll discuss at length. So as far as BTC goes, one pertinent thing is the monthly close. I would quite like for this month to close above previous month's high. If it does, that would constitute a bullish engulfing, that is to say, a spike below previous month's low and a close above previous month's high. That would be a bullish engulfing on the monthly, and I think would suggest that the likelihood of testing resistance is higher than likelihood of testing support. Okay, so we've sort of been diddling in the middle for some time between 24 and 35, away from the high time frame monthly levels. So it'd be nice to get some resolution and some indication from this area as to which of the other structures it will be tested first. Also, purely technically, if the market then breaks away from here, I think this red range that we've had, this new cluster, will be a level of support to look at for future price action. So that's good. What I don't want to see is the following. I'm okay with the monthly closing below April's high and spiking it, unless that starts to really roll over on the lower time frames. I think that's acceptable. However, if it closes back below previous month's low, that would then suggest we're still in choppy conditions, because the monthly close will have spiked previous month's low, closed above it, spiked previous month's high, closed below it, and that would suggest chop. So I'm okay with April high providing a bit of an obstacle, but previous month's high has to break, I think. So that's the monthly view. As far as the weekly goes, it sort of encapsulates similar type of price action, where the market is up against the range high at 31k. Contextually, I think this isn't as clear-cut as hitting resistance and going down, and the reason for that is the preceding context is that we had 2 months of drift and downtrend that then resolved to the upside on a bullish break. So if the market is strong, it shouldn't be bleeding back down and retracing this move, and especially if it does so quickly, all of that would be a bad idea. So I think, as before, as per Monday markets, the maximum tolerable pullback level is up to, or in this case down to, 29.3. I think anything below there starts to look rough and would skew the argument towards range continuation rather than range breakout. So whenever you have the market essentially push up against a range boundary, you have to make an assessment, do I think the market will continue to range, or is this a break from those ranging conditions? Now, of course, the simple TA version to look at, one TA framework to apply to this is to basically say, I will assume that it's range bound until proven otherwise, and proving otherwise would mean a weekly close back above this level. I think that makes sense on a technical basis. It might be difficult to trade because if we get a breakout from 30k, it's likely to be fast and sharp and volatile, and also paired with the fact that there isn't a ton of space between a big 30k breakout and then the next level of resistance, which we know is the monthly 35k. So that's a bit troublesome. However, just as a general point, when you have the market up against resistance in a range, you basically have to make the following determination: odds of range cont, right, versus odds of range break. And I think contextually, it slightly favors odds of range break, given, as I mentioned, we had a long downtrend that was broken in one candle, sort of 8 weeks of selling in one move, with a plausible, credible sort of narrative or catalyst, which in this case is the spot ETF. So I'm leaning towards odds of range break, but it's important to see what would the odds of range continuation look like if that one is more compelling. And as I've said before, even on the daily time frame, this is visible. This is where the market is right now, making the relative risk reward of fresh long positioning quite tricky. And I say so because we've had 1, 2, 3, and now 4 days where attempting to time the breakout before it has actually broken out has cost people money. That's been a very tricky trade to take. So again, purely on a technical basis, you could just wait for a daily or a weekly close above and then take that as your breakout trade with an invalidation on the thrust candle low. The reason on a lower time frame basis that deeper pullbacks are not acceptable is because if we consider the range scenario, if this is our range high, and let's say, for example's sake, this is our range low, if the market just starts to drift significantly lower, then I think that would push the odds to favor range continuation rather than range breakout. And at that point, it would just look like a standard rejection at resistance, from which you then expect a test of the midpoint and the range low. So that's why sort of contextually, I think only shallow pullbacks make sense, because the deeper the pullback, the higher the probability that it's not a range break or a range break that's forming, but instead it's more likely to be range continuation. Okay, I know that's a bit sort of fluttery and messy, but hopefully it makes sense, and at least that's how I think about it in my head. Now, where that leaves us on the other time frames is essentially all the same area, which is quite helpful. So if we look on the daily in terms of that acceptable shallow pullback level, I think it coalesces around 29.3 to 29.4k. And if we look on the 4 hour, that's also a pretty sort of evident level as far as support and resistance goes, where we had sort of this low, and then a cluster of highs built up in the same area, and then the market just blasts through it here. So however you want to delineate it, you can sort of superimpose a reasonable shelf in terms of, as long as it's above here, the odds that this breakout keeps going are higher, and anything below here, I think you can flip bias and assume that the range will continue and start to fill in a lot of this one-sided sailor price action back into support. Okay, this is unfortunately one of those situations where you really have to be dynamic with your assessment, because by definition we are doing business at or around an extremity, in this case April's high. So I think you sort of need to be on your toes when it comes to this and be ready to flip bias quickly if the market gives you a good reason to do so. And I think for me a good reason to do so in terms of higher time frame picture bias flip would be that monthly close that I mentioned, closing back below previous month's high, and the way that would look and sort of cascade on the lower time frames is failing to hold 29.3, 29.4. I think those 2 points together would skew the odds to favor range continuation rather than range breakout. But as long as we're above support, I'm happy to give this some breathing room, so to speak. I'm just wondering if there's anything else I want to mention. I think for the rest of this, once we do ETH, we'll talk about this price action here and the catalyst as well as the implications. Now, ETH BTC is catching a bid, which is good. Well, is it? I mean, it's fine. It's certainly different. At the moment, we had this sort of double bottom fell out around the 55 level. Sorry, that's the 62-ish level. And then if this daily closes back above, that would be a pretty significant, I think, reclaim on the ETH BTC front. It still doesn't look amazing as far as the weekly goes. But if we have confluence as far as weekly swing failure pattern and daily failed breakdown at this extremity, that would also be quite a good signal. Now, as far as the relative pair, the USD pair goes, I still think the clearest weekly swing trade is some version of close back above 1.9, take it towards 2.5k. That is still pretty clear to me. If we look on the daily time frame, trying to front run that trade has been a bit of a nightmare, right? If you try to do it in this area across this cluster of days, it didn't work. More recently, 3, 4, 5, however many days, wick hasn't worked. I think this is one of those worth waiting for in terms of daily close or daily break or some sort of actual shift in structure. Trying to front run a breakout before the breakout actually takes place can sometimes work, but 8 times out of 10, you'll end up buying resistance anyway. That's sort of why I'm not flip-flopping, but certainly making a similar argument for BTC, that it looks good. I think at the moment you can make a very strong argument for a breakout, but if you try to time that breakout before it actually happens, it's a pretty good way to get chopped and lose money before the move materializes. So as long as you're aware of that concern, you're not too aggressive with it, I think you can save yourself some of your account balance. So other ETH levels that I think are pertinent, hopefully the weekly idea is clear, above 1.9 towards 2.5 seems reasonable. As far as the daily goes, that actually looks fairly constructive. I think on Monday markets, we talked about this cluster as being support on any pullbacks, and that ended up acting as excellent support, certainly the upper boundary here on the larger pullback, and it's sort of fully engulfed all the downside price action since then. So as far as the daily goes, pretty much same thing. I think trying to front run the breakout is probably not the best idea, but as long as you get daily acceptance back above 1915, 1920, which is similar to that 1930 weekly level, I think that's a pretty good argument, especially given we've already had one clear failed breakout at this level and then a ton of wicks. If this manages to close above, it shouldn't be a fake out. I think the odds of that break being real, unlike this or some of these wicks that didn't close above, I think a daily close above in that case would be quite constructive. And we're seeing this bid spill over to a bunch of altcoins as well. Solana's up 10% today. Poor trader main missed his bids by a tiny bit, so max pain for our Canadian colleague on that front. But Oh, Litecoin is up 30%. Don, my friend, Don. Yeah, okay, so that means alts look strong, ETH looks strong. I would have preferred, honestly, to see more BTC strength off the back of this, and for this watch list to happen at maybe 32, 33k, having cleared the range high. Because if I went into bear pawn doom poster mode, which is never my default view, but always something I consider, it would essentially be the market is so horny and so desperate to front run this breakout that they've given up on trying to do it on BTC, and they've just piled into altcoins, taking for granted that BTC is going to break out. And so if BTC doesn't break out and the market's piled in with a ton of exposure into alts, if this thing even coughs, all of these alts will move significantly lower and then drag the market lower as well. That's certainly the doomer pawn bear case. I'm not entirely sure how compelling it is. I'm going to need to see more evidence given how this daily candle looks. It's been a very sort of whipsaw headline driven day, but I think in the back of your mind, it's worth having that consideration that essentially the daily time frame hasn't fully broken out yet, and you want to be careful into front running a breakout before it's actually broken out. We see examples of that in BTC. It's not going well for traders. We saw a ton of examples of that in ETH that hasn't gone well for traders. So you don't want to join that cohort because that cohort isn't doing particularly well. But I think a lot of the altcoin bids we're seeing right now are obviously reactive bounces to this type of BTC price action, but also the market trying to position for BTC's breakout by buying altcoins on the assumption that altcoins will do better than BTC to the upside, which I'm not completely sure about. Again, given the overall market structure is Bitcoin dominant ETF led rally, I would prefer to see some more longevity there, at least to clear us from the 30k range high before those rotations take place. But I don't make the rules, obviously, and our job is to align with the market and not impose our views on it. So yeah, that's kind of it for BTC and ETH. Hopefully you can tell what the prevailing theme is. It's essentially assessing whether we finally get a real breakout from the April range high, and the same for the 1920, 1930 level for ETH. Obviously, the market has decided that to some extent for themselves by piling into alts on the assumption that the range high is going to break. But I think waiting a tiny bit for that evidence would help, generally speaking. I caught a bit of this dip on the actual wick. I closed that quite early because it's a low time frame position. But for me, this is just a really sharp move on spot into a level that I quite liked, into sort of this range low extremity. I played a portion of that bounce, not the whole thing, obviously. I mean, that would have been nice, but alas, I was kind of shitting it as the market was puking into here. I think my final fill was, where are we talking? It's on one of the candle lows. Was it on the daily? Yes, I think it was. I think spot spiked here. Futures might not have, but in this area, was watching the market just pile in on the low time frames and just tried to buy it up, really, and caught a decent portion, but closed it early towards essentially this consolidation here, which is, in hindsight, maybe not the best decision, but good trade given, you know, the entry and everything else. So nothing too spicy from my end as far as swing stuff, low time frame stuff goes. As far as swings go, I think it's worth getting some resolution to these relative range highs in BTC and in ETH. And yeah, that's what makes sense for me. And if you want an episode of Altcoin Thursdays, you know what? I'll just do it. We'll do an episode of Altcoin Thursdays next week. Hopefully the market hasn't gone to zero. As far as Bitcoin-specific price action, catalyst, narratives, all of this stuff goes, essentially the market was reacting to some headlines, and it was the following headline from the Wall Street Journal, which essentially said the SEC made the statement that the spot ETF filings are inadequate, and that was the language used. And so the market immediately reacted to this very bearishly, because a lot of as you'll recall, sort of narratively, this entire move is BlackRock spot ETF driven. And so when the market saw a negative headline from the SEC in relation to the strongest catalyst we've had in the market, obviously the response was negative, and the market to some extent maybe have, you know, over sort of priced this in too much or overrated the news and analogized between the word inadequate and also sort of a lack of approval or denial, right? So inadequacy and denial being two different things, but essentially this entire move is ETF driven. SEC has been antagonistic. Then you have the SEC saying that the entire reason that the market has gone up might not be legit, and the market just started pricing in significantly lower odds for ETF approval, and the market nuked. And then the market bounced because it ended up being, or could potentially be, a sort of technical matter and a matter of sort of administrative application more so than a pronouncement as to whether they're going to approve it or not. So this is from Eric Balkunas, who's an excellent account to follow, senior ETF analyst at Bloomberg, and he says, "Hold up, this isn't as bad as headline. The key paragraph is deep in story. Basically, the SEC wants them to name the crypto exchange and give more details on the SSA. That's understandable. Arguably good news. I was under the impression they have to update that as well. And so essentially this is a sort of technical point on the filing, that on the surveillance agreement regarding the spot ETF, they said they would use a US exchange or a specific crypto exchange for this surveillance sharing agreement, but they didn't name which exchange it would be. And so the SEC took issue with that on what seems to be a procedural note, and I think the response was simply that they will refile and then the SEC will review it once again. So again, this isn't set in stone. It's obviously a developing situation. The market's kind of going wonky, trying to price it both ways. Oh, it's so over. The ETF is never going to happen. We were scammed. Versus we're so back. The ETF, this is just a procedural bump, and the ETF's actually getting approved. But I would say it's a live situation that's currently developing. My indication is it seems to be procedural in nature, but it does tell you how jerky the market is given this type of price action. Let me see if there's any more color here that's useful. No, I don't think so. So the best case scenario is that this is just a overreaction to a technical administrative point and a bit of a lurid headline, and that this dip was a gift. And I think also purely technically it makes for a decent invalidation. Like if this is peak FUD selling on news that isn't real, there's no reason the market should revisit this low if it's strong. So that's one helpful point. And essentially the best case scenario, as I mentioned, is that this is an administrative point. It doesn't actually change the high odds of the spot ETF being approved, and we're so back, and this is just a bit of forced selling off a dodgy headline. The worst case scenario is that the SEC is kind of signaling how it will determine this matter, and it's an administrative point first, but then there'll be a delay and then a cancellation, denial, what have you. It's not entirely clear to me where we are in this. Again, I'm personally leaning towards this being an administrative point, but I think, again, this shows just how sort of ETF focused a lot of the buyers in this market are, because just the word inadequacy, without any delay, without any rejection, managed to have this type of market impacts. That's pretty important context as well. The other point I will mention is the following. As far as liquidations go, it's been a rough day for crypto traders as a whole. For a lot of the time, you'll see liquidations happen on the back of a sort of one-sided move. So, market goes up, shorts get pummeled, market goes down, longs get pummeled. This is one of those days where both sides are getting pummeled. It's skewing more towards shorts now. It was more even earlier in the day. But this is a fairly large day of liquidations relative to some of the more recent action. And you have 200 mil in licks, 120 on the long side, on the short side rather, and 80 on the long side. So this is the whole, I made a tweet earlier about not getting chopped up and suggesting that people zoom out and sort of get reacquainted with the high time frame view. And I think these, types of data definitely indicate that traders are just getting balls deep in anticipating a breakout or anticipating a move before it's happened, or certainly just trying to add too much leverage before the actual break. It actually reminds me of some specific sort of early crypto price action. I think it was the 20k break. There were some other ones as well, where essentially the market would come up to, probably not visible on the weekly, but the market would come up to these key levels, and before breaking them, the entire market would take it for granted that they were broken and just pile the fuck in long. And then what would happen is they would get rinsed, and then the market would eventually break out just without them having tested their patience. So on the whole, I think on average and generally, like waiting for confirmation on everything can cost you and can be a bad idea. But certainly when it comes to high time frame closes, I think they're more useful than they are not. And if you find yourself just piling in to closes before they've actually happened, it can certainly erode your trading account, even if you are directionally correct. So that's really the recurring note there. Shorter video than usual. That's really all I have to say. Hopefully the update is somewhat clear and useful. Essentially, again, to summarize, we're battling with extremes at range highs and dealing with horny participants trying to time the breakout before it's actually broken out and getting rinsed as a result. Now, that doesn't mean the market is bearish because they are doing that, but it does mean that timing is important and that some of the higher time frame closes seem to be worth waiting for. I probably will have more comments about the altcoin rotation on altcoin Thursday. For the time being, ETH BTC, if it closes the daily like this and the weekly as a failed breakdown, would look constructive. And we're seeing big bids in Dino coins and high caps in general. My gut feeling is I don't particularly love how that's happening before BTC is broken out, but that is not in itself a setup or a sort of dominant directional bias. It's just sort of something in the back of my mind that I'll percolate on if I start to see emerging weakness. So an example of putting that trade idea to use is I know now that the market is trying to time the BTC breakout before it's broken out by piling into altcoins. So for example, let's say the higher time frame shifts to midterm weakness and falls back below 29.4. I will want to be short altcoins because I know a lot of the leverage piled in at the top. So that's one example of how I'll use that piece of information to potentially inform future trading decisions. But I'm flat at the moment. I mean, I've caught some portion of this punt with a really good entry. That's fine. Sort of low time frame bread and butter stuff. I don't want to have any swings on for the time being. And yeah, that's really all I've got to say. Hopefully that makes sense. Congratulations to Don for the birth of his daughter. We look forward to having him back on the channel. Leave him a comment, leave him a like, all that type of stuff. Send him a DM. Poor guy is tired, but I'm sure he can't complain. He wasn't the one bearing the child for 9 months. That's all from me. I know it's not the usual Casual Friday. We'll try to bring it back as soon as possible, hopefully next week. Thank you to Woo for supporting the show. Hopefully one of our ref legends wins the competition. If not, it's obviously my fault. I take full responsibility. Leave a like, subscribe, congrats Don, all that good stuff. Don't get chopped up too hard. Have an excellent weekend and see you on Monday for Monday Markets. Goodbye.